moving on, we're actually staying in Alaska. We're not moving far. We're moving on to HighGold Mining, and to President and CEO Darwin Green is joining us. Roughly a 60 million market cap company with great success the last 12, 24 months out there. Spin out happening very soon as well of some of the assets in Timmins and in the Yukon. Definitely worth listening to. And to Darwin, thank you so much for joining us. Take it away.
Thanks, Guy. Thank you all. Thank you, Willem and Terrence, for the invitation to be here. It's a real privilege to be able to present our story. And this is pretty cool. I've never had one of these kind of headsets. I feel like I'm doing a TED Talks here, so well done on the professional deal. So I'm going to present on HighGold. HighGold, we're called HighGold for a reason. We're focused on high-grade gold or very rich gold systems. When I was invited, they suggested that I customize the talk to more of a retail or generalist crowd because, we're fundamentally a very technical business. We talk about technical things, and it tends to bore guys. So what I've tried to do here is mix it up a little bit and provide a little bit of a front end on the why and the how of investing in junior miners and use HighGold as a bit of a case study because it's my favorite pick. So, very, very high level, there's two principal ways of investing in gold. You can buy physical gold or a line on physical gold through ETFs or what have you. That's really to preserve your wealth and preserve your buying power. I've heard it best by describing, 100 years ago, you could buy a really nice suit with an ounce of gold, US dollars, $30 or so. Today, you can still buy a really nice suit with an ounce of gold, but it's going to cost you about $2,000. But if you want to create wealth, you want to actually create real value, that's in buying shares of gold miners and gold explorers. And in our view, explorers advancing that next generation of gold mines offers the biggest, greatest leverage and upside. It's the most exciting place to be, and it's a great place to be in a rising gold market. The trick is, I think, as an investor, is really understanding your comfort zone. Not everyone's comfortable with real high risk. And what I've put here is just a very simplistic chart. On the vertical axis is risk, from low to high, and on the horizontal axis is reward. So, nothing, we'd all love to have low risk and high reward. It doesn't really exist. So in the low risk, low reward corner, you have the producers and the royalty companies. Great place to be still. And when the price of gold rises, these things rise quite nicely. You can get double your money. The slightly less risk, or slightly more risk, and slightly more reward is in the developer category, where there's an established resource there, so you have something. And ultimately, those things do very well in rising gold markets and when there's M&A or takeover activity. And then ultimately, on the explorer side, you get the maximum torque and leverage to discovery. And that's really driven by the drill bit, by the type of, like Kit's last presentation, with making that new discovery and that growth. And what HighGold offers is a little bit of both. We have a real asset and a real resource. It's a high-quality resource, but we also still offer that leverage to the exploration side. So for us, it makes a good place to be investing. This sounds pretty simple, but really these are the key elements. You want to start with good people, great projects, and great jurisdictions. Jurisdictions do matter because you get bigger multiples when the takeover happens. People like more stable environments to develop mines. We all look for value in this, but keep in mind a high share price doesn't always mean or a low share price doesn't always mean good value. It really depends on the asset itself and ranking that value against the asset. And you need to be well funded. We're a business where cash is our fuel. We spend money, we don't make money, so it's critical that the companies you're investing in have that exposure or have that financing to be able to get the job done. So just looking at people, for us, our group is very experienced in what we do. We focus on jurisdictions we know well and deposit types that we know well. And collectively, we've been involved with several discoveries. Our senior vice president of exploration, who really designs the drill programs, he was involved with this discovery that was a tier 1 discovery that was taken over for $2.3 billion. Similarly, our board, very accomplished board, very diverse. I won't spend too long talking about it, but this is really important to be looking at when you're evaluating companies. This is a slide that sometimes you'll see at the back of some people's decks, sometimes at the front. It's actually a critically important slide. Every company should have it in their presentation. Not only does it tell you how much cash and what the value of the company is, pardon me, it really tells you the endorsement of the asset and of the people. So you're looking at the shareholders up here. In our case, we have a senior gold producer. That's our single largest shareholder at 9.9%. That's one of the top 3 global gold producers who's invested in us, not necessarily because we have senior producer size deposit yet, but because they believe it can become that. Similarly, on the institutions, top-notch U.S. institutions that are very experienced in this business. So, they've got armies of people evaluating things. So theoretically, they're doing your due diligence for you, as well as other kind of notable mining types. And we do have research coverage and newsletter coverage as well. So, looking at the assets, we are North American focused. Our principal or flagship asset is the Johnson Tract. It's located in Alaska. It's a very sort of accessible coastal part of Alaska, near to Anchorage and some communities where there's a workforce. We've been able to establish a high-grade deposit that's just a little bit more than 1 million ounces gold equivalent at 9.5 or 9.4 grams per ton gold equivalent. It is polymetallic, meaning it has gold plus other metals, in our case copper and zinc, which are nice sort of energy transition metals to be involved with. In addition to that, we've got a portfolio of properties in the Timmins camp. This is Canada's #1 gold producing jurisdiction. There's an old adage in our business, a good place to find a mine is next to another mine. And that's got more mines, per square kilometer than anywhere else in Canada. And we've got a massive land position there, as well as a large land position in the Yukon, which is an area where there's been a new discovery made right next door to us that's really opened up that area. And what we're doing now, we've got this kind of wealth of assets that we've been advancing. We're actually going to spin out our Canadian assets into a new vehicle. It's going to be called Onyx Gold. And the reason we're doing that is basically because we have one dominant asset that's carrying all the value of the company, and it's overshadowing the value of those other assets. So this gives us an opportunity to daylight that value and create real value without doing that much work. It's kind of, in this business, you can create value through the drill intersections or transactions. And this is a creative way of kind of unlocking value for our existing shareholders. So the way it works is a shareholder who buys shares today, come mid-June, we will spin out and dividend out shares of the new co. So you'll be able to keep your HighGold shares, plus you get new shares in the new company. Part of the reason for doing this, not just unlocking value, it allows us to focus, now that we have something real, we can focus all of HighGold's energy on making that discovery, turning it into a mine, essentially, or getting it to the point that it's going to be a mine. It also helps align investors. Some investors, when I went back to that earlier slide, like that really speculative, early-stage, discovery-focused exploration. Others prefer something that has an established resource. So it better aligns that, and it certainly opens up more avenues for financing. So going forwards, we expect 2023 to be a very busy year. This allows us to be incredibly active on all fronts. All projects will see drilling this year. And that'll be starting up in a couple of months' time. Looking at Johnson Tract, I'll walk through Johnson Tract here, our Alaskan asset first, and then in the back end, I'll talk about what our plans are for the Yukon and Ontario. But in Alaska, we really are going to be building value in 2 ways. One is building that value with the drill bit. We have something real. We want to keep growing that deposit. We made another discovery about 4 kilometers away on the property. So we're going to hit that hard. We think it's another deposit in the making, and by the end of this year, we want to have a resource there. We also have a pipeline of other prospects that we're going to keep advancing and get them to the drill-ready stage and perhaps make a 3rd or 4th deposit discovery. Concurrent with that, we're going to be busy doing the boring stuff, the engineering, the environmental baseline work, the permitting, advancing the project so that we can, when we know we have a mine, we can be a lot quicker in making the decision to develop it. So projects like Johnson Tract are really fun as a geologist to work on because it drills there's some absolutely outstanding mineralization there. We've drilled some of the best drill holes globally over the last 3 years. We've been on the top 10 list prepared by OPAX. OPAX is an Australian sort of mining database company that compiles global drill intersections, and they rank them at the year end. And we've been on that for the last 3 years. Interestingly, we've been on it from both our main deposit and this new discovery we made. And really, that's just telling you, it's, when you're drilling some of the biggest, longest intersections, it's a good place to be exploring and developing deposits. This seems to have a mind of its own and advance independently here, sorry. But so with those intersections, what we've been able to generate is a really high-quality deposit. And what I mean by that is we've had this rare combination of both high-grade and very thick. It's about 10 times the average thickness for a high-grade deposit. And what that means is it's going to be high-value ore and lower cost to mine. The thicker your deposit, generally the lower cost it is to mine, and that's, it doesn't take a rocket scientist to realize that's good for margin and mineability. It clearly has the potential for scale to grow. We already have found a second deposit. We think there's more to be found. Lastly, and equally important to all of the other criteria, is can you permit and build? Do you have the social license to develop a mine? And in our situation, we're actually leasing the land. The mineral rights in the land is owned by a corporation that's owned by Alaskan Native groups. Wonderful professional groups to work with, and it feels good to know that some of the revenues generated from a project like this will flow to the indigenous people that live in the region. We're not at a point of knowing we have a mine yet, but we're looking ahead to, is it a mine? And one of the neat aspects about this property is it has some optionality from a development standpoint. You can build a conventional standalone mine where you have all the mill and the tailings and waste rock and everything on site, but because our grade is so high and because we're sitting right on tidewater, it does offer up the option to basically barge your ore somewhere else to an existing mine that's on the coast to process. And the advantage of that is that it reduces your upfront capital to build your mine significantly, so it's a lower hurdle to get a project into production. It certainly will make it simpler and quicker to permit, and it leverages existing resources elsewhere. I'm not saying that's the route we'll go, but we like it from the optionality and sort of protecting an investment because it means we have a lower hurdle rate likely to get this thing online. And it's funny sitting in the hotel here looking out the window and seeing the barges go up and down the river. I think this is a foreign concept to many, but in a place like this where there's so much marine transport, it's a good way to go. This is just a barge mobilizing our equipment, our drills at the start of the year. We pull things in by barge and then we hop them off with a helicopter right now. This is a shot of the lay of the land, and it's just highlighting our proximity to that coast. We're not literally on the coast, but it's about 15 miles of road you'd have to build through fairly gentle terrain. All the snow and ice you see off to the west is largely off the property. So that's an advantage. These things all matter. Can you actually, all well and good to find a great deposit, but where it's located and being able to get it out of the ground and to market is a key part of whether it becomes a mine or not. Looking at our exploration upside now, this is a map of, it shows a trend that's about 10 kilometers plus long. All these red blotches here are big alteration zones, and the call-outs here of different areas of mineralization we've found. So main deposit, Johnson Tract, sits down here. 4 kilometers to the northeast is the new Ellis zone. This was a really significant discovery because it told us that this property had the potential to host multiple deposits. So you'll hear people describe their project as having district-scale potential. All that means is it has the ability to host multiple deposits over a broad area, which we've already proven, and now we're trying to advance more of those concurrently. So looking at the main deposit, this is a slice through the mountain here from surface. One of the things we're looking at doing is actually developing some underground access, basically tunnel into the bottom of the deposit. What this does is it opens up a lot more terrain to explore because it gets deep and expensive to drill from surface, so it gives us that ability to keep drilling it to depth. It allows us to upgrade the known resource. It also leaves us with some wonderful infrastructure to transition into a mine, so it would be like a down payment on your mine in a way because you've already built the access in there. That's a multi-year plan that'll take us a couple of years or more to get that in, but we're working on that process right now. In the meantime, one of our big focuses this summer is the Ellis zone. This was a new discovery. Last year, we got 35 holes into it. It took fairly modest step-outs, and we've been able to show that it's got continuity and great grade. We have 7 intersections that are better than 100 gram meter. And that means something to guys like Terrence at Commodity Discovery Fund, because generally, systems that generate those types of intersections are ones that have much better odds of ultimately becoming a large deposit, tier 1 type system. So our mandate this summer is going to be stepping out from this to keep expanding that resource, and at the end of this season's drilling, when we have all those results back, we'll get a resource on it. This is just a colorful map of geophysics. Really what this one's talking to is the fact that we've got our main deposit up here, and you can see that the patterns of low magnetics and high conductivity are replicated down here to the south. There was a couple of holes from the 90s that were on the fringes of this that hit stuff that looked very similar to stuff we find very close to the main deposit. So this is one of these areas that we're going to put a few holes into, and you can have that third deposit discovery. But we don't know until we drill it. This is exploration. Okay, so now I guess part 2 or part 3, switching to Yukon and Ontario. So this is the spin-out, one of the spin-out assets. And one of the catalysts for us spinning this out is actually a very early stage project that we've had for about 10 years that sits at the very east end of what's called the Tombstone Gold Belt, shown here in pink. And what that is a concentration of intrusion granite-related deposits that are very big, but often quite low grade. What happened was there was a discovery made out here last year of one that's about 3 or 4 times the average or typical grade of these systems. And that means something because, one, it's generally better economics, but also given the remoteness up here, it's important to have that grade. And so what that's led to is us dusting off this project we've had, where we've had one of these basically drill-ready projects ready to go. And this here is just a map. It's a claim map, for scale, 20 kilometers. Sorry, this thing's dying on me. Valley discovery up here is the big new discovery, like maybe 25 holes. You can probably see 7 to 10 million ounces already. It's a massive new discovery. Their claim blocks are both north and south of us, and the King Tut you can see there in the middle, we have something that's like a look-alike for that system. This, just zooming in on it, this is a map. It's about 20 kilometers east-west here for reference. Bright colors here represent soil samples. It's one of the early stage techniques you use in mineral exploration, where you actually go out and you collect a grid pattern of dirt when you can't see the rocks below you, and you analyze them for their chemistry, and if you see gold or copper or other elements, it tells you there's probably a mineralized system below you. It doesn't guarantee it's an ore deposit, but clearly that gold that's kicked up here is from something that's below the soil cover. What we have at that gold mass, for example, is it looks small here, but it's 1 kilometer by 1 kilometer, very high-grade golden soils sitting on top of intrusion that looks exactly like Snowline, the Valley discovery, looked before they drilled it. Can I guarantee you're going to drill the same kind of intersections they did? No, but that's what we do in this business. We test these types of targets. And in addition to that, we have the main Tut, which is multi-kilometers long, and we have several other properties as well. So we'll be drilling that this summer. We will also be in the Timmins camp. This, for reference, is about 100 to 120 kilometers east-west. It's a very big image here. So these are massive land positions covering really good geology in an area that's known to produce multiple deposits in areas that are underexplored. We spent several years consolidating land. Then we started drilling last year. We actually made a discovery, but last year was a terrible market for discoveries. And so we got no reaction to it, but we're excited about getting onto this one as well. So just to wrap things up, why high, why now? I mean, we think we do offer a pretty unique opportunity of a 2-for-1 type investment. You buy HighGold, you're going to get shares of this new spin-out. The main vehicle is going to focus in on our high-quality, high-grade resource with lots of drilling in front of us and a path towards, in our view. We think we have visibility on this eventually becoming a mine. We've got a lot of work to prove that, but that's our agenda. And a spin-out that's got great properties and great jurisdictions, strong treasury, and we're cheap. Thank you very much.
Well done, sir. Well done.
My pleasure.
Thanks, Darwin. I think we have a few minutes for questions, so stay on stage, stay in the light. Stay in the lights. It's all about you, not me. Do we have any questions from the audience for Darwin and about their project, the Johnson Tract project? We have one from Terrence.
Uh-oh, it's going to be a tough one.
He's the head of the jury committee, so you know it's going to be tough.
Darwin, I have a question you might not want to answer, but we're always looking for big deposits. You refer to JT as high margin, high grade. Does it have high volume in terms of the sizes that we look for, i.e., is it a tier 2 deposit, or does it have that potential?
Well, for us, that's why we're exploring. That is the question mark. I can't say the name of that. Our senior gold producer, who has a 9.9%, isn't there for just 1 million ounces. They're there for something significantly larger. Typically, when you find good mineralization like we have, there's generally more around, and that's what we're trying to do. We think there's reasonable prospects of this being something that works as is, but it's a lot more exciting if we can continue to grow it. And that's exactly what we're doing in terms of both. You can do that 2 ways, finding other adjacent deposits as part of a sort of a camp and build collectively or cumulatively the ounces. And that's where the Ellis Zone comes in. And this year we're going to test the South Valley that really does look like a lookalike. There is a faulted offset component of the resource that you may remember that we failed to hit from surface. That's part of the rationale for getting underground, is to keep chasing that. So I guess in our view, yes, that's why we're putting majority of our budget to drilling and not just sort of engineering and environmental baseline work.
Fantastic. Do we have any more questions from the audience for Darwin? Great, I have one. Okay. What's the timeline on drilling? When can you move in, and when can we expect exploration news flow?
Yeah, so we expect to have the drills turning the first week of July in Alaska. In the Yukon, that will likely be end of July, and then in Ontario will be sometime in the fall. In Alaska, we did something a little different last year. We actually built our own on-site lab prep facility where we crushed and pulverized the rock. There's been a real bottleneck in our space, as I'm sure you're well aware, where it's taking months and months to get your results back. And when you have a seasonal project, that's tough because you want to get those results to guide your follow-up drilling. So we put in a lot of expense to build our own lab. The analysis is still done off-site, but it actually gets you right to the front of the queue. So we get sort of 6-week type turnaround instead of 4-month turnaround.
Fantastic. You have $60 million in the treasury, roughly. How much are you going to spend this year?
Yeah, we're still finalizing that, but we're going to spend a good chunk of it. It'll be a plus $10 million program this year.
Yeah. Oh, fantastic.
Yeah.
Awesome. Darwin, do we have any more questions for Darwin? Thought I saw a hand go up. No, we're good. Fantastic. Darwin,
Great.
thank you so much for joining us, and we'll see you later.